of this international organization, because most of this international organization as I think I can share my screen now. Let me try. Okay. Thank you, host, for enabling me. I can share my screen now. So I hope you guys can see my screen now.
Yes.
Right. So it can help you to secure grant. That's the most important thing for small businesses. You want to make sure that your business, you're able to secure grants and you're able to pitch your business to potential investors. It's important. I remember there is a particular program, I call it a program that PiggyVest usually have. The last time I attended it was in, I think, 2021 or so, 2021 or so, where they bring small business owners together. They come and pitch their products. Oh, this is what I do, this is what I do. And at the end of the day, I think the first position went home with, as at 2021 or so, the first position went home with maybe 5 million and all of that. So one of the requirements to even get to be shortlisted, to even be at that event to pitch your whatever you do, some of these documents are part of it, right? And I remember the guy who won that year. I mean, what he pitched was something that I don't know up tonight if ask somebody who is doing that. I mean, what the guy business was all about is a Zobo that looks like Lipton. You know, Zobo, normally people have to make it. Of course, I don't even know how they make it, right? But I know that you have to cook. Somebody told me they cook something and all of that. But this guy that has a Zobo, that was his business. His business idea, what he is doing currently. He has a Zobo that looks like Lipton, that you can even have cold Zobo. Just take cold water, put that Zobo inside of it, like a Lipton, and it changes. And you taste it, it tastes like Zobo perfectly. So that was the guy who won that whatever, but that's not important for this. I'm just trying to let you know that some of those events, if you want to attend them, one of the requirements to be shortlisted for those kind of grants is to make sure you do all these things, right? You say, wow, Sarah, yes, even me, it still wowed me up to today. Even that day, it wowed everybody there. And the guy won. He went home with, I think, maybe about 5 million or so to support his business. It's probably sponsored by PiggyVest. You understand? So these are some of the things. That's why I was saying that it's important that things that has to do with stuff like this for your business, you take it more seriously, because the honest truth is you never can tell when or where these things will come back at you. And it may be at the point that you cannot afford not to maybe get that grant. I hope that answers your question, Sarah.
Yes, sir. Yes, sir.
All right. I think we can go ahead now. We've got so much on this because I don't want to make these things, this session a long one. So the next slide before we go on break is what are accounting records? Yes, you know what accounting records are. In fact, in the process of answering some of your questions, I've answered and talk about this over and over again. So what you just need to know about this slide is that it's important that your accounting records are up to date, because they are even often reviewed for audits. Yes, I have an experience in audit too, because back then during my undergraduate days, I worked in the audit division of KPMG Nigeria, one of the big 4 accounting firms. So authoritatively, I can tell you how audit works. Yes. So for auditing, for example, one of the things we do is that we review your financial statement for audit. I mean, for a small business, nobody will be after you to audit your financial statement. Nobody should be after you to do that. No, they feel like, oh, you're a small business and all of that and all of that. But by the time your business start growing, audits will become important. For example, Company and Agent Matters Act 2020, I think Section 597 require that every company must audit their financial statement. And more emphasis is placed on the public limited liability company. So for a small business, the act is silent as to whether you should audit your financial statement or not. But as you grow, it will be a requirement for you to audit your financial statement. So if you don't keep proper books of account, by the time we start auditing, we know. You know, sometimes people used to think auditing is about detecting fraud. No, I tell them that all auditors are accountants, but not all accountants. Yes, all auditors are accountants, but not all accountants are auditors. Yes. So what I tell them is, look, if I'm auditing your financial statement, I can tell you the issue. And one of the primary motives of an auditing work is to express opinion. My primary work or primary duty in the engagement is not to detect fraud. It's a secondary thing, but I can in the process. Yes. By the time I start checking your record, I can tell if you don't keep proper books of record. Yes, because there are certain things I will check, which I might not need to talk about here, right? That I will know that you're not keeping your proper books of account. There's something we call audit trail. Audit trail is checking a transaction from the inception to the conclusion. So I can trace this transaction from when you initiated it. So when that transaction is concluded, and you know, I'll just be requesting for certain documents once I see them. Oh, this is, and I can tell. And from that, I can tell whether your business, proper books of account is kept or not. That's why you see that if you go on Google now and Google any financial statement of any company, in fact, Kama mandated that they publish their audited annual reports. Go there and Google maybe MTN, Google Nestle, you'll find the annual report on their website. And you see that those annual reports were audited by reputable organizations like KPMG, PwC, Deloitte, amongst others. So it's important to keep proper books of accounts so that audits will be seamless. And we'll be able to see compliance check. We'll be able to run a compliance check. Yes. From your books of account, I can tell even if you are compliant, if you are in compliance with the relevant regulatory requirements that is necessary or that is expedient, for your business, I can, discover that in the process. So it's important you keep proper books of account, right? So the next one is basic terms, basic bookkeeping terms that you need to know, right? What are the basic bookkeeping terms you need to know? You need to know what assets are. So we usually say that assets are just any transaction you have made as a result of past events and from which future benefits is expected to flow into the organization. What do we mean by that? By that definition, I'm giving you like a kind of technical definition of asset when it comes to accounting, but let me break it down. Your asset is anything that you have purchased in order to produce more wealth. For example, if I buy a laptop for my business, I'm not buying the laptop just to be playing with it. I'm buying the laptop to run business, to run operations. And the laptop, indirectly or directly, will be responsible for generating my revenue. Do you understand what I'm saying, guys? So your asset is anything you buy that you expect that it's going to last for more than 1 year. And you expect that it's important to run your business because in the end, your asset will be required. For example, if you're into distribution of makeup materials, as the case may be, right? And you distribute it from here and there, you have a delivery van. Like that delivery van, you bought it, and by the time you buy it, you expect that you're able to use the delivery van to deliver whatever you sell to your customer. So in a way, the delivery van is contributing to the way you make your income or your revenue. So it's the delivery van. At first, when you bought it, you parted with an amount of money. That's what we mean by as a past event. The resources will go out. But along the line, when you're using it to distribute, you are getting money, right? So that's what we mean by economic benefit flowing into the organization. So asset is expected to last for more than 1 year, even though you can have non-current asset or what we call or fixed asset, because now we have international reporting standard IFRS, and then from it sometimes we don't call fixed asset again. We call them non-current asset. Current asset is still current asset. So current asset is expected to last for within a year. For example, is your inventory or your stock of goods you have. It is expected that the stock of goods you have is sold within a year. So it's of a short, the length of time or the span is short in nature. The treasure machine for palm oil, yes, that's if you want to classify that in your books of account, treasure machine should be your non-current asset or your fixed asset. Yes, thank you for that. And what governs this asset of the thing? Because sometimes we can call them generally as what we call PPE, property, plant, and equipment. And international accounting standard that governs it is International Accounting Standard number 16, property, plant, and equipment. It explains the recognition of all these assets, how you recognize them in the books of account. You understand what I'm saying? Even when you bought them, what constitutes the costs of that asset and how you should recognize them, whether at cost or at a valued amount. These are some of accounting terms that I want to try to break down, and I want to make sure I'm not speaking too much of a jargon because I understand that not everybody here have a background in accounting. So asset is just anything you have that you expect that should last for more than 1 year and you generate revenue from. What are your liabilities? Liabilities are just your obligations to people. What you are owing people. Yes, what you are owing people who are investors in your business or who are partners, they will form a liability to you because in a way they will become a creditor to your business, right? They will become payable to your business. So if you go to a bank to secure a bank loan, it is called a liability. That's what you are owing. You also want to keep a track of this in your books, in a financial statement or in the books of account known as balance sheet. But if I don't want to call it balance sheet, according to IFRS, I'll call it statement of financial position, right? That statement of financial position will show the state of affairs of your business, which is showing your asset, your liability, including the equity component of your income. That's like the capital of your business, right? Then the income is all monies you receive in engaging in economic activity. You know what that is already. You know what expenses are. Expenses are all the money you spend to operate your business. Yes, this is where I want to pay a bit more attention to. One of the reasons why small businesses are failed in Nigeria and in Africa generally is that we fail to distinguish between operating expenses or business-related expenses and personal expenses. I've seen situations, I've been opportune to, work with people who have small businesses in the past who just summoned me to say, okay, hi, Elijah, I think I have this, this challenge. What do you think? And I realized that one of the challenge all these small businesses have is that they have failed to distinguish between operating expenses and personal expenses. And I can relate with that. I mean, while growing up at a very, very younger age, I can remember my mom having a shop where she sells stuff. And I remember my mom then that even when I'm crying that I want ice cream, she would remove money from the, whatever business money to sort that. And no proper accounting for that, right? Even when somebody comes to greet her, she move money from it. So, and the way the businesses were, organized, then some of you can relate with what I'm saying. Maybe your parent and all of that we organize then is that we just believe that since it's anything that is a business money, it's also my money now. It's a lie. One of the orientation I want you to change from this session is that your business money is not your personal money. They are not the same thing. Even though you are the one who funded the business with 1 million naira from your personal money, as long as you want to be successful in that business and you want to make sure that there is proper recording and accounting of transaction, then you need to understand that there is a difference between personal expenses and operating expenses. Because in the end, if you cannot separate between personal expenses and operating expenses, in the end, the profit you will be getting will not be a true reflection of your profits. And that's where problem will start from. When you are getting the profit of 1 billion naira and in the end, it's not a true reflection. And that can be replicated in even a particular thing that happened. I think Enron is one big firm some time ago that in the book of their financial statement, every annual report, they were reporting that they are making profit of so billion of naira, not knowing that that so billion of naira was not a true reflection of their profit. At the end of the day, the business crashed. You can Google it. Enron is a company, I think in the UK. At the end of the day, the business crashed, and when it crashed, it led to over thousands of people being out of employment because of the unit of the business, because of the negligence of a particular unit of the business. They were doing what we call creative accounting, right? You may not understand that in accounting is a way we try to make sure that we cook books, just like the way they tell you we are cooking. When somebody is saying I'm cooking something, I'm coming, that slang, we are cooking. So, the way we cook books, and we cook those books in tandem with the, applicable accounting standard, right? To make sure that book reflects what we want it to reflect. It's a reflection of our thoughts or what we want. So it's one of the things you don't want to do as a business. Please note that you will be able to separate your personal or non-operating expenses from your operating expenses, and you should be able to account for it. If under any case, maybe your boyfriend, your wife, your husband visited you, and you must spend from the business money in any case, if you must do that, if you are doing that immediately, you recognize that in your books of account as a drawing, right? Because as a drawing in a way, that will reduce your equity. And as time goes on, you might return. And if you are not returning, it's recognized as a drawing. It reduces your equity, and we know that so amount of money has gone out of the business. Not like, so whatever expenses I make, as long as, it's my money that I'm using to do with the business, is the same thing. It's one of the, the mindsets you may want to part with in this session, right? The next thing we want to talk about quickly is we still have some terms as well. We have cash flow. Yeah, cash flow talks about your movement of money. Yes, the movement of your money. Now, I will ask you a question after this session, a very, very funny question after this session, that in the end, I just like playing on people's intelligence. And in the end, if you see that I'm trying to see how quick you can think, and I'm trying to put your intelligence quotient or your thinking faculty to tests, right? So another way is, cash flow. So cash flow will show your movement of money. Yes, because the truth is a company can be making profit, and when it comes to cash, they can be low on cash. And it's very important that a company, has a good cash flow position so that you'll be able to meet your short-term requirement for funds. The short-term requirement for what? For funds is important, right? So, for example, you might need to pay salaries, for example. So, if a company can be making profit on the some of these things I will be discussing were just product of some of the experience I've had, right? A company can be showing on this financial statement that is making profit, and when it comes to cash flow, they are low on cash. And the truth is, to run a business, there's a level of cash you have to have, because there are always operational expenses every day. There are always reasons to spend cash. But if a business is saying I have a profit of 1 billion naira, but in actual sense, the amount you have in your bank account is just 100,000 naira, it shows that there is a problem, and a problem is looming, or a disaster is looming. But we will get there where I will be able to put those things for you into perspective, right? And the preparation of cash flow statement is governed by what we call IAS 7, International Accounting Standard number 7. It tells us how to prepare cash flow statement, right? The next one is account payable. Yes. What are account payable? Account payable are just like, it's part of your liability. I'm just using the term for creditor here. Those people that you are owing as a business, they are your account payable. Why do we call them account payable? Because you are liable. Why we call them account payable is because if those persons are still alive, you are liable to pay them, right? So it's a liability to you, and you must pay them. So they are your account payable. So it could be to your banks, to suppliers, to companies. Then you have your revenue. The revenue is what you make from sales. Then you have your account receivable. Account receivable are those people that are owing you, that they must pay you, right? As long as they are alive, before it becomes a bad debt. We have capital or equity. What are capital or equity? Like I said earlier, I made mention of this. So your equity component is just all those money that serve more or less like a capital in your business, right? For a small business like ours here, in this case, right? Your capital can be talking about things like the money your personal money that you have imputed into the business. It might be an amount of money one of your own gave you and say, I'm using this to support your business. It's part of your capital. But when it comes to or equity, but when it comes to a company, when I say company now, maybe a medium to large company or a limited liability company, your equity can now be divided into different components. For example, your equity can be from shares, because as a public limited liability company, you issue shares to the company to subscribe, and the money you receive from it is a capital to your business. It's an equity component. Your equity component can also be, apart from shares, an addition to it is your retained earnings. Then earnings might be the profits you have made over the years, a portion of the profits you have made over the years that you have decided not to spend, but plow back into your business. Somebody made mention of that while she was talking about tax. We call it retained earning or plow back profits. So you can decide to take this money back to your business to make sure that you enlarge your business and you are more positioned for opportunities. Like another component that can be for a business is what we call capital reserves or revenue reserve or revaluation surplus. You can decide to revalue your asset to economic reality. For example, a laptop that costs 100K in 2020 will not be 100K this year. This year now, you might still have that laptop, and the current market price of that laptop now, which sometimes we might refer to as fair value, depending on how we are seeing it, now might be 200K. I cannot decide to say, okay, let me revalue that my laptop to the current price, which is 200K. So if I say 200K minus 150K used to be in 2020 when I bought it, what do I have in essence? 50K. I cannot recognize that fictitious 50K. I call it fictitious because you cannot see it yet because you have not sold the asset, right? I cannot recognize it as a what? Revaluation surplus. It can also be part of the reserve. So I can add that, to make up my equity. That's for a company. I don't want to go too technical in that regard. But in the aspect of a small business, you're talking about all monies that you use in running the operation. It might be from your personal pocket, which you must separate from your business account. If you had plowed, say, 1 million naira to run your business, that 1 million naira should be a capital in your business accounts. Even though that your business now, you now be like an investor or a creditor to your business. That's another thing you have to understand as a business, is that you have to see your business as an entity that is distinct from you. Do you get what I'm saying? Do you get what I'm saying? It has to see as an entity that is distinct from you. Nobody is talking. Do you get what I'm saying? I've been talking to myself.
Yes, we're following, sir.
Yes,
Okay.
sir, we're here.
Let me just be sure you are hearing me, All right. So from there, I moved to journal. So I moved to general ledger. So general ledger are just an account you use to store and sort and summarize your transaction. Yes, as you grow as a small business, you can use Excel to So create your general ledger and all of that, which is what I intend to do before this session ends. I intend we end it as soon as we can. If I can show you that Excel, because I'm sure some of the slides I'll be showing are things I've more or less talked about that I may not spend more time as I could have on them. So those are general ledger. It shows the amounts you are debiting, the amounts you are crediting, and you may want to understand that better. Then the journal as well, it works hand in hand with general ledger. Journal just sometimes it says a principal book of account. In a school, for example, the head of the school is principal. That means when there's a challenge between the teachers who solve it, they'll go to the principal office. If there's a challenge between students who solve this, if teachers cannot solve it, they go to the principal office. So that means the principal accommodates every challenges, right? The same way for journals. So journal is like a principal book of account. Under journal, you can record all transactions, regardless of the nature of that transaction, right? That's why they call journal the principal book of account. Then trial balance, you use it to test the arithmetical accuracy of the transaction as recorded in the ledgers. Yes, it's just a test to see if they are correct. And when you talk about leverage is like a debt component in your capital structure. The capital structure of an organization, you have a part for equity. A part for equity is that part you get through shares or through personal funding. Another part of it is debt. Some of us will be like, oh, no, I don't want to borrow for business, so it's not good to borrow. No. I can tell you for even large corporations that I'm privy to some of their information, I know that borrowing is part of the daily living of the business. You have to borrow. You have to have a component of your capital structure that is what given to debt. And that's what we call the leverage part of the business. So leverage, you're talking about debt, right? So I think I've been clear on that. Then the next thing is why bookkeeping. Can I go through this quickly? Why do you need to keep books of account? Number one, you have to keep accurate transaction record. I've explained that over and over again, right? Number two is that asset and liability tracking. Yes, for me to track your asset and your liability, you must have kept proper books of account. Another thing you need to also know is that when you keep proper book of account, it helps us to make informed decisions. We don't just make decisions because we feel like that's what we need to do. We make informed decisions. If you're a business owner here, you should understand that you make decisions from your financials. Your financials contribute a significant percentage to the decision we take. For example, if you realize that you have you have segmented your markets, right, into maybe 3 segments, and realize that 2 segments is bringing revenue, 1 segment in a particular year is not bringing revenue as it used to be. Then it is on that basis you make decision to say, okay, should I have more marketing campaign for that segment that is not bringing more revenue as it used to be, or is it that there is a competitor now, having a share or sharing that market with me that I need to look into? Okay, if that's the situation, then I need to intensify on my marketing campaign, and by marketing campaign, I can maybe for that market have like a reduction or a discount, or I can have a period, say from July to August. If you order from me, you get 20% off. You see some vendors doing that. I want to believe that most vendors doing that are doing that from the perspective of their financials. And they are not just doing it from because, people are just saying, they're not just doing it, but because people are just saying, when you go on WhatsApp, you just see that somebody is saying, order from me and get 50% off. And you're going to go and get 50% off. Oh, your case is sorry. So you have to make your decision from the angle of what financials. You don't just wake up and say, I want to be doing discounts because somebody is also into farm product beside me, and I just hear that somebody is into farm product and is doing discount. No, you make decision from your financials. So the question is, if you don't even have proper books of account, how will you make such decisions? Are you with me, guys? I hope you are making sense. So it's important for you to understand all these things. It's important. It's not negotiable, right? So you make decisions from your financials. So compliance with legal regulation. Yes, when you keep proper books of account, I've said that already. It will make us know whether you are compliant with regulation. Somebody was talking about annual filing. You cannot make an annual filing with relevant tax authority if your books of account, if you don't keep your books of account, what are you going to file to them? They are going to go there and start explaining, you see, I do this. Like they say, you go explain. No evidence, because the evidence is your proper books of account. That's what is part of your filings, right? Then control over fraud and risk. Yes, when you keep proper books of account, you can have control over fraud and risk. Yes, you can have control over fraud and risk. It's important. You should be able to have control over your fraud and risk. When somebody is trying to, like somebody who says she has a staff, for example, It's possible, for your staff to, connive with some people to want to, run your business streets, right? You understand what I'm saying? Want to, do some kind of shady things. Don't mind what I'm trying to say. I'm just trying to make sure that I'm speaking in a language all of us here can relate to, and the class is not, So you can go ahead and, make sure, so that person is trying to run, if you have proper books of account, you will be able to, you'll be able to track those things. Gloria, I can see your hand, I'm coming. Let me just finish this. You'll be able to track whatever fraud. Prevention, they say, is better than cure. You'll be able to prevent even fraud when you can see them from the angle of your financials. Because even in auditing, I can tell you for free that in auditing, one of the things we pay more attention to in auditing is cash audit. Because we realize that cash is the only asset that can easily move within a nanosecond. Cash is the only asset that somebody can easily move and nobody will notice. Nobody can easily move your vehicle from your premises. There can be traces. Nobody can easily carry your office building. It's not even possible to carry your office building or move your office furniture. But cash, it can easily move from one place to another. So one of the things we do in auditing, we audit cash. We want to see how is cash, what's the movement of cash? What is it looking like? Because we know that is where fraud can be perpetrated, right? I don't know if I should take Gloria's question now. Gloria, quickly.
Thank you so much for this opportunity. It's quite impactful and such opportunity like this. I'm so grateful. God bless you, sir. Amen. But I have a question I wanted to ask for more clarity.
Okay, please go ahead.
Yeah, I have a friend who sometimes, her business is registered, but she sometimes was working on it with her business and all that. She had about 2 staff working with her. And eventually she was unable to continue with it. She had to pack it up and then run another staff, pursue her career, in her education. Now she back to business now. But the point I'm trying to raise is that she had opportunity to apply for a loan. And from that process, she was being asked to bring her FRS documents and all that. The business is registered, but there's no proper documentation in terms of getting a logo and do all that, the stamp process and every other thing. So as it stands now, she qualified because she was for over 2 years now, she has not run the business, and now the opportunity has come. How will she do it? Well, she's in a process of trying to get in touch with the FRS, do the documentation, the stamp process. But whatever issues that they will ask her in terms of accounting and process, I don't know. She was asking me, trying to get confidential, how would she go about this and all that. I was like, she need a counselor to advise her on this. But I wanted to throw it to the house to get more clarity on that, on how to respond to her, if you wouldn't mind, to shed more light on this. Thank you.
Okay, thank you very much. I want to be sure I got your question. So if I get you correctly, the person has registered the business for 2 years and there was no proper books of account, but was the business operational for those 2 years?
Yes, sure, yeah.
Business was operational. It's not difficult to do. What the person will just do, we prepare financial statements in retrospect, right? Retrospectively, right? So what the person should just do is to see if the person can get as much as possible, maybe transactions that has happened. It might be through a bank statement. Of course, if you don't have evidence for any transaction, you have through your bank statement if you make transfers.
Okay.
But I just cannot tell maybe from cash transaction and all of that. So let her just see how she can get some of these transactions together, get someone who is an accountant to, come up with a financial report from that. Okay. And she'll go ahead to present to the FIRs or whoever is in need of it. That's what can work at this time because of course, the evidence is that there were operations.
Okay.
You were operational. Sure. So if you're not operational, it's another thing. So only if you want to be seeing it from the angle of, although I registered this business 2 years ago, but I was not operational, I did not do anything.
No.
I just registered the business and I went to sleep. Okay, I'm with you.
I'm hearing you. It was on operation. She was working with it. But that accountability recording and all that wasn't properly there was no proper documentation in terms of accountability. But one or two things striking, so she was able to like abandon the business and then look for some other things and then pursue her education. But as an opportunity comes in now for a kind of getting a loan and grants, whatever, so she decided to dive in now back to her business and started trying to see how to, scrapple through. So that was the question she asked me, what would she do? Then I told her she needed, I think, a financial assistant to give her the best counseling on this regard.
See,
So I
the
just want
truth
to shed more light. Yes, sir.
Oh, yes. Thank you very much. The truth is, like I said, let her sit back and see how she can trace some of those transactions, get an accountant on board. From that transaction, she will prepare something, tailor it down to the needs, what she wants to do now. But it's not one of the best things to do at this time. But since she needs that, then she can do that. But the truth is, when it comes to this thing, because these are some of the things that are done, that are being advised, and have been given as an advice to clients and everything. So there's nothing that is impossible in this part of this world, in this part of the world. So let us see if she can trace this transaction, because I would even advise that if possible, she can trace most of this transaction by maybe bank, all these bank statement, whatever, because sometimes to have like a source document backing some of this transaction, in case she is asked, she can easily show about it. So she might restrict what she will recognize in those books of account preparing to what she has an evidence.
Okay.
Do you understand what I'm saying? So that
Yes,
in the end, I don't claim that I bought laptop for my business, and that laptop is not. They now ask me, where is the receipt? Even though if I say I can't find receipt, at least there's an evidence of payment that I transfer money to one boy in Computer Village to get those two laptops.
Okay.
So I'm telling you, even some of the challenge that comes with audits, because the company, the company she's trying to get a loan from too, will want to do their own checks too, to see that when you say your profit is this, is it true? So they may request for some of these documents, and it will be like the joke of the century to now get there and they are requesting for some of these documents and you are not able to do. Just look at you and like, are you playing with us? You understand? So that's what I think she can do.
All right, sir. So grateful. Thank you.
All right.
Done. Thank you.
Somebody's also raising his Oh yeah. Ask the question quickly.
Yes, sir. Thank
So
you.
that we can go for break. What do you say?
This is Sarah Deniji. Thanks for the class, sir. I don't really have any background in accounting, but I could understand the class very well. You broke everything down. But I have this challenge. I want to ask, what is the importance of having a business account? Because I've tried
a business what?
Business account.
Okay.
An account that it is taking the name of you opened it with the name of
okay. Yeah, I understand.
I've tried all those banks but the challenge I'm having is that the amount they want to be deducting from the account is much. So I was able to open a business account with an online bank. With
an online
right? That document, yes. So I was able to open a business account with Kuda. What I want to ask is, can I actually use it in filing? When I want to file my tax returns or filing for my business, can I use Kuda, or will they check my transaction records? I actually want to know how it works.
Okay, thank you very much for that question, Sarah. I get it correctly. You want to know how that works, particularly when it has to do with not having bank accounts with some of these traditional banks like the ones. Now, the honest truth is that I may not be able to tell you emphatically, right, if that will pose a problem, right? If I answer this question, I'm answering you from my own understanding and knowledge now. I cannot tell you how that works. How that works in the sense that if that will probably give you an issue when it comes to filing, I'm just speaking for myself now. I don't think it should, right? Because what really matters in the end is that, okay, you have an account number. Okay, from that account, you can ask you, can you generate your bank statement for us for, say, for the month of September? Is what you can do now. I don't have an account with Kuda, but I know it's possible, right?
Yes,
So you go there, you generate the statements, you go and present it. So I think what matters, what should matter is the fact that you have an operational account, right? That is for the business, and that every expenses or money that comes in to the business can be easily traced to that account, and there can always be an evidence. That's the bank statement. Do you understand?
Yes, sir.
So going by that route, I don't think it's going to be much of a challenge. But like I said, I'm answering you from my own understanding. I'm not sure if that is what is applicable. But I don't think there's any regulation around the fact that you must have a bank account with popular banks. Of course, Kuda is known, if I'm correct. Kuda is known and is registered in Nigeria, even though it's a fintech. It's known, and they have a license from CBN. So I don't think it should be an issue. Because CBN is the one who licenses banks. And if you can have a license from CBN, it means you are recognized as a financial institution in that country of operation. So I don't think it should be much of a challenge from that angle. I hope that answers your question.
Yes, sir. Very well, sir. Thank you, sir.
All right. So can we continue so that we can go on break? Because I want to make sure we end this session by 1. Are you with me? So we just go on break for like say 10 or 15 minutes, we come back and we continue. I want to make sure we end this session like 1. Interesting clarity from me. Thank you. My question is, how can I stay filing my documentation? How can I still file my documentation with FIS even when my business is just at its early stage? How can you file? I think what you need to do, right, if you ask me, is that the first thing you need to do, I think, you can go to the nearest FIS office closer to you and tell them you have a registered business and you just want to make sure you are filing your return. I think how that works is that they can, what's the word now? They have a way of doing those things that at the end of the day, you have what we call TIN, tax identification number, right? And from that tax identification number, they will pick things up. Do you understand what I'm saying? So the advice I will give you is approach any FRS office closer to you. Yes. So they have a way of they have a way of onboarding your business, yes, on their platform. It's important. That's a good idea. It's like you are going there to self-report yourself. That makes sense. So you can just visit the next FRS office close to you. I hope that answers your question. Yes. Okay, thank you. Any other person? And I hope this question we are asking will let us finish what we have to say. Any other person? Somebody else? It's great.
Yes, sir. Good afternoon, sir. I have a question.
Okay, go ahead.
Okay, my question is the business we are doing, though I'm not the one that started it, it's my mother-in-law. So when I come into the business, she have done the business registration with CAC and she got her TIN. So I want to know for this tax, but because I've not seen her saying she's paying tax or anything. So how can we go about it?
Okay, thank you. Please hold on, please. Thank you, addressing. Hold on. Guys, please hold on. Just a minute. Okay, guys, I'm back. Apologies. Can you hear me now?
Yes, sir. Welcome back, sir.
Yes,
Thank you
sir.
thank you very much. So your question is that you have a business that has TIN, but you have not heard her saying she's paying tax.
Yes, sir.
How do you go about it? That question. Okay, let me answer this way. I think what you will do is, for you to say you have not heard her saying she's paying tax, I mean, it's in two ways. It's possible she has not been paying tax at all, right? Or it's possible she has been paying tax, maybe you are not aware of the tax. And the payment of tax, like I said, if it is a small company where your turnover is less than or equal to 25 million, right? It means that the business recognizes, I mean, FRS recognizes you as a small company. Even though you can file returns, you might not be paying tax. So when she says she's not paying tax, it's possible that she's enjoying the privilege of being a small business. And like I said, not paying tax in that regard is talking about company income tax and tertiary education tax, right? It's not talking about maybe other tax like if you have staff, you have paying, that you are paying for them and all of that. You understand what I'm saying? So that's how
Yes,
you
sir.
work. So you may just want to meet her, ask her, and get more information to see for how to even have a TIN. So maybe the possibility is that, right? The possibility is that she's not paying that. I think she's enjoying that privilege of being a small company. You understand what I'm saying?
Yes, sir.
Yeah, so you can just ask her and be sure. Then from there, you can now know how you can. If that she's not paying tax, you know what that means, man.
Okay.
Yes.
All right. Thank you, sir.
Yes. So, two participants raise your hand.
Hello, sir. Please, can I add something?
Yes, go ahead.
In that regard, I think if they find out to get to know that the business has been functioning and she has not paid her tax, she has not been up to date with her tax, I believe she'll be fine. From the very first time or first period she obtained her TN, and then would have, let it be as if the business is an early start. Then you said they know how to work on that. But for the fact that the business is well functioning and all that, and you are not accurate with your tax, I think there's always a penalty for that, if I'm correct.
You're right.
And that's
There
what
is
I
always
wanted.
a penalty for not paying.
Yes,
There is
sir.
always a penalty for not paying tax. You're right. I want them to do that out. Right? Even when you fail to file, annual file, there is a penalty. In fact, there is an imprisonment of 3 months on some of those penalties. It depends on how big was your offense. The fee of that offense on the offense list of the FRS is if in the event of the fact that tax authority, official of the tax authority comes to your business, they come to where your company is and they're trying to look at your business account to attack them physically. That's the fee. And the penalty for that is that if you pay 500K and you can be free for a period of not more than 3 years. Others are just like 3 months and you pay. Now you pay to pay tax now. You pay that tax you fail to pay. That tax has been calculated, but you not pay it. So the penalty says that you pay that tax you have not paid with plus an interest. And interest will be calculated as the latest MPR rate. The latest MPR rate has been used by the Monetary Policy Committee by CBN. Now it's 18.5. So you pay that tax you have failed to pay, and you also pay 18.5. So just to explain further that truly they are penalty. So I said that earlier, but I didn't want to say more about that. Was why I said that there need to be people who not paying tax, and you know what it is. You are just on that conversation there. So if you know you are supposed to be paying tax your operation, and that's why I said it's 2 things. It's actually never had that same she's paying tax. So it's possible she's paying this particular person now, or which is unlikely to happen, or she's not talking about it because she's still a small business. That's why you're not paying tax in this regard. We are referring to people income tax and tertiary education tax. Or maybe she knows that it's a small business. And her turnover still over around 0, naira to 100 million and to 5 million. Those are the 2 million. Do you understand? But like you said, if truly is operational and they're supposed to be paying tax and they did not pay, my brother, if you are sorry, my sister, if you are convicted of not paying tax, you pay that tax. That is not paying. Not depending on how grievous your offenses, you might even pay an interest on it and even be liable. Because they will tell you it's a criminal offense and you go to prison for 3 months. So I hope you understand that. And the person
Sorry, sir. What do you mean by operational?
Operational in the sense that you have started business. You are, whatever you are selling it. I mean, you have been running the business. That's the meaning of operation.
Okay, what if the person is not yet operational, fully operational? How will the person not do that? Will the person still pay that money? The person is not fully operational.
What do you mean by fully operational?
As in, income is not steady now. Sometimes income comes in, sometimes income does not come in.
Whether income is not steady or not, you are expected to file returns. I think that's what we don't understand yet. The difference between filing, you address this earlier, that the fact that you are filing returns does not mean you have to pay tax. You can file returns and your tax liability is 0. But filing returns means that you are showing us that this is what your operation looks like. I can look at your financial statement. The financial statement should mirror what your operation looks like. That's what we are saying. Do you understand? So you are supposed to file returns. Regardless, even if your revenue is 0, file returns at the end of every fiscal year. My revenue is 0. Let them know their record. You know, every company has record with them.
Okay, so somebody that's not somebody that's not filed that returns now for a while, will they still accept it at 0, or they want to pay that fine?
If you have been operational, you will be penalized. But to get more clarity into this, you can go to the FRS and explain that to you.
All right, sir.
Don't worry, they won't arrest you. Don't think they will arrest you. They won't arrest you. I'm serious, they won't arrest you. Just go there. They won't arrest you. They just tell you.
All right, sir. All right, sir.
It's like going to a police station to write statement. It does not mean you will be behind the counter, but you just tell them what to do, what to do. So under this importance, you also have tax preparation and filing. I've explained that. So you know what we're going to do now? Let's go on a break of 10 minutes. We'll come back by 12:31 and we'll end this session by 1. So guys, we're on break. Thank you very much. God bless.
Thank you, sir.
Thank you, sir. Thank you.
Ensure you come back by 12:31, 12:30 or 12:31.
Thank you, sir.
Sorry, sir. What if we just continue? This is one you're closing. Well, I don't know if it's the opinion of the class to make and just ask.
I just feel like we should have a break of 10 minutes. I mean,
we normally have 30. We always have 30 minutes actually. So this one that is 10 minutes now. Is it not better we just finish the class?
I think it's fine. Let's go on a 10 minutes break and come back.
Okay, if you insist.
It's like, all right, guys, let's start quickly. Somebody said, what are ways to overcome spending operation expense? I'm coming, I'll get there. That's one of the slides I will talk about. I'll get there, don't worry. Remind me in case I don't talk about it, but I'll get there. Now, what are the users of financial statement? You know already, I've explained over and over again. The owners are interested, yes, the owners are shareholders. In your business now, you have partners that are running the business with you. They are interested in your financial statement. You see how well the business is going. Management, yes. If you have other people that are managing the business on your behalf. Your employees, yes. Your employees want to see your financial statement sometimes to know whether they should continue to work in your organization or look for greener pasture. Because when you see that organization is making loss, year 1, year 2, year 3, you already know that you need to leave that place. So I'm probably look for an employment elsewhere. But generally, these are users of financial. External now, tax authority, FRS, that's what I'm saying. They need it for tax filing, right? When I get business grants after trading, our prayers are with you, Sarah. Now, tax authority, FRS, right? We have lenders like banks. They are also interested. Nobody will give you loan if they don't see your financial statement. And why are they checking? They want to see whether you have the capability of paying back the loan. Or when they just give you the loan, after 1 year, you are not able to pay. Although somebody will ask that, maybe I drop collateral. Yes, even with your collateral, the bank is still interested in your financial statement somewhere. You see whether you are able to pay back the loan, including the interest. Government agency like CAC, yes, if you want to register your business. And also, there's a part of CAC that requires companies to file their returns. For example, if the company is changing their directors, it not require that for a public company to file to the CAC and tell them that you are changing your director, and you also include the details of the new directors you are onboarding. Trade unions like NLC, they are planning to ground our economy by October 3 because of you already know the issue. So trade unions who are interested in your financial statement so that they can talk to the association and say, employee ask you, tell federal government you need more salary because you can see that the federal government is now making more money, right? They are now repatriating the fund Abacha stole, for example, or the Paris fund. They will now come and say, oh, we want increase in salary. So suppliers who want to see whether they should continue to supply the customers, public and other interested parties. The next thing we'll talk about is source document. What are source documents? I have explained this where I was talking. That's why I love it when participants ask questions because questions will help us in the way somebody will cover our syllabus, whatever we talk about, or what we have in our curriculum. So source document, what are source documents? Source documents are those things that evidence a transaction. Those transactions are occurred. A good example is receipt. I was asking somebody this question that was saying, what do you want to go and meet FRS and all? I said, when you are paying the account, ensure maybe you work with things that have evidence. If you remember what I was saying, that the source document is like that document that shows evidence. So that as time goes on, there's not look like you are just explaining, and there's no evidence. So some of those source documents are like your receipt. What shows that you bought something and you have paid for it? Your receipt to show that. So in accounting, for example, you don't just believe us on your financial statement. So somebody can just say, if it's just to have financial statement, I'm just going to prepare something. You are playing. Because we are interested in things that evidence those source documents. You understand what I'm saying? So some of them are your receipt, your invoice, right? Your deposit slip. What evidence that you deposited an amount of money to a particular customer, for example, you can check the deposit slip to show that, oh, this is deposit where I got from her. Your bank statement, I've explained all these things. Those are things that evidence the another, for example, payroll report. Payroll report shows the amount you have paid your staff as salaries. Check counterfalls. Check counterfalls, you have to check. Beside it, there's a portion of the check that you don't tell the check. There's that portion that gives us the evidence of the check, like the check number. In case you are looking for that check, you can trace. There is that counterfall to trace the number. We have purchase orders, yes, to make order. We have debit note and credit note. Yes, the next is accounting circle. What are the accounting circles? Yeah, I've explained it. We start from source documents. Can you see my screen, everybody?
Yes, sir.
From source document that shows that the transaction has occurred. From there, you prepare journal. When I say journal, principal book of account, I explain that from journal it goes to ledger. Those are your book of account. From ledger it goes to trial. Test your arithmetical accuracy, whether your ledger is prepared well. From there, it now goes to financial statement. This is where everybody is interested. This is what everybody is interested in. The financial statement, according to the IFRS, International Accounting Standard 1, they comprise of 4 things. For a limited, for a company now, a bigger, but for a small business, it's not really necessary to have all this, but it does not mean you should not still have it. But you can prepare it as a small business. And according to IAS 1, we call them general purpose financial reports. That is, everybody can prepare it. Number 1 is your income statement. What you call profit or loss. Then what you tell us how profitable your business, whether your business is making a profit or loss. That's what that income statement shows. Right? Another one is your statement of financial position. I've mentioned this also earlier. That one shows the state of affairs of your business. You want to see your assets. What is the total asset your business has? What does your liability look like? And what does your equity? That's a capital component. What does it look like? Those are the things you want to be sure. right? The next one is what we call statement of cash flow or cash flow statement. I said this earlier on that standard that tells us how to prepare it is known as IAS 7, something about standard 7. It tells us how to prepare the cash flow. So the cash flow should show the liquidity of the business. Liquidity of the business means that the cash the business has, I explained that earlier on. Is the business able to meet its short-term obligation? Because one of the problems businesses usually have, if you are not liquid, like you don't have cash, there will be challenges paying salaries. You realize that month on month, you are not able to meet up with the salary of your staff. You show that your business is having a liquidity problem. Yes. So your cash flow statement shows that to us, how liquid or otherwise. And the next one is statement of shareholders' equity. Changes in equity, yes. It's also what the general purpose financial statement asks us to look into. Statement of changes in equity. What does that mean? For example, when you start the business, you have shareholders. That shares, maybe your total shares is 1 million naira. As the business was going on, you have more shareholders. You say, let me buy 1 million more. The shares have become 10 million naira, right? So the account that shows the changes in that shares, whether it has increased or not, is known as statement of changes in equity or statement of shareholders' equity. Then the last part is note to the financial statement. This one is like a disclosure to the financial statement. Like other things you would like to tell us about your company that is not in financial statement. Like, look, where my company is going, I have a current legal litigation in the courts. Somebody carried our business to court, and there's every likelihood that as our business is in the courts, we may not win that case. And if we don't win that case, my business might cease to operate. All these things are what you should have on that to note your word financial statement or disclosures. To tell us things that other people need to know about your business, or other things that might be a threat to the existence of your business, so that all the stakeholders involved have to take their mind. The next thing I want to talk about, and this one we will discuss, is that, can somebody tell me the difference between, from what I've explained, what's the difference between profitability and liquidity? Somebody, difference between profitability and liquidity. Oh yeah, we'll talk. You don't need to maybe try to find it out from what I've explained. Just talk. You don't need to start or something. Tell you what I do.
Okay, sir. Can I talk?
Yes, I'm with you.
Okay. If I understand clearly what you explained, so let me just attempt. Profitability is the level of income that the business has generated from its operational activities, while liquidity is the the cash flow available to the business for its operations.
Thank you very much. I don't know your name. I'm saying Jesus Christ.
Gloria, sir.
Gloria, thank you very much. That is just how I'm spotting. Thank you very much. Any other person? Let me take one more person. Nobody's talking. One more person, quickly.
For what, sir? Some of us are just joining.
Some of you can't what?
Some of us are just joining, so you don't understand.
Sorry about that. I have the reason number of people who have joined before now. How come it's only Gloria that is talking? Sarah, where are you?
I'm here, sir.
You are here?
Yes, sir. I'm with you, sir.
Okay. Any idea? Any thoughts?
No, sir. None for now.
Your mic is very low. Are you far from your phone?
Hello, sir.
Okay, let's go ahead.
Yeah, I think I totally agree with Gloria what she said. The profitability is the level of increase that you are getting from your business, the productivity, the level of the increase, the benefit the business is generating in that business. Then while liquidity is just as the cash flow, the flow in of income, money coming into the business for the operational. So that's what just totally in line with what she said.
You also Gloria too. You have to Gloria in the video. You are correct. Can you hear me? You also Gloria, right? Okay,
Yes, she is.
Oh,
She
okay,
is.
okay. All right. Thank you very much. So that is spot on. Thank you very much. So difference between profitability and liquidity. Yes, you are right. See, what I want you to know and what I want you to take home from this particular slide is that a business can be profitable and the business is not liquid. Can you mute yourself, please? Who is that?
Somebody that has the
Tony Alade, please mute yourself.
Thank you, sir.
Thank you. Now, a business can be, what I want you to take out of this is that as a business, you can be profitable and you are not liquid. That's what I want you to take out of this. You can be profitable and what? Not liquid. Now, listen, your statement of income shows your profit. But you know that in commercial entity, when we are reporting, we report based on what we call accrual basis in accounting. Accrual basis is when you recognize the revenue, when you earn them, and not necessarily when you receive them. And you recognize expenses when you incur them, and not necessarily when you pay for them. You understand? That means that you can be in a building that you are using for your business, right? And you have not paid for that year you are into, and you recognize the payment of that rent in your statement of income as if you are paid. So do you understand what I'm saying? So, and that is part of what determines your profit for the year, right? So the fact that business is profitable does not mean it. So what you need to know is that if you are seeing a business financial statement and they are showing profit of 2 billion naira, please, the next thing you should go and do is to check their cash flow statement. Because it's possible for them to be showing a profit of 2 billion naira and the cash they have is not even up to 1 million naira. Look at the data. So as a small business, what you should be looking at is that you should not only be aiming to be profitable, aim to also be liquid, because liquidity is important even for capital expansion. If you need to expand your operations, maybe to other states, maybe to have other businesses or other business line, adding up to your main business, you need cash to meet your operating activities. You understand? So note that the business can be liquid. Liquid is when you're talking about the cash to meet your short-term operation. Profitability is when you're talking about the overall financial performance of the business over time. I hope you get that. Even from the explanation, the two Gloria gave, it's obvious that you understand or you understood what I've been talking about. So next, quickly, what is the basic regulation? I've mentioned this, so I just have a slide to illustrate that. IFRS International Financial Reporting Standard. That's what I've been quoting since, like the IAS. IAS International Accounting Standard. Yes, we had IAS before IFRS. IAS is like the forerunner of IFRS. You understand? So when you are still saying IAS, the way you're talking about IFRS, right? Because it was not until around 2011 or 2015, we are now like, okay, let's modernize our IAS. Let's not call them IAS, let's call them IFRS. But then those IAS are still binding. So it regulates the presentation of financial statement generally. Another regulation is CAMA. I have mentioned it. Another one is Finance Act. I have mentioned it. Another one is Company Income Tax Act. 2011 has amended. I have mentioned it. Why is this like this? Another one is Personal Income Tax Act. 2011 has amended. So we've been discussing this all along. Yes, here we go. What are the generatives? This is how we answer the question of that person who asked me, how can we make sure it is something? I can't remember the question, but in this particular slide, I will answer the question while explaining. Okay. I will be able to answer your question. So the general tips you need to know, there are basic tips that can make your business stay afloat or collapse. Please mute yourself. I don't know who that person is. Dorcas, mute yourself. All right, thank you. So, what are the general tips? Number one, you need to understand the peculiarities of your customer. That's the number one thing that can help you as a small business. I have said somebody, when I asked the definition of business, somebody said that the business has to be something that is tailored to some people's needs. The first thing you need to first understand that the business is you have to understand the peculiarities, the needs of your customer. The business is an exchange of value. And in this life, all we do is about exchange. I'm coming here to take you a session because the management of this particular training believes I am skilled to take this session. So what am I doing? I am trading my service for an amount. You understand? So for you to have a good market share and control a reasonable amount of the market share, I can tell you for most of the companies we celebrate today, from Nestle to name them, they were companies who understand the peculiarities of their customer. How many of you noticed that before 2023, we don't have anything like 3-in-1 menu, for example. But now we have it. Why? I'm very sure Milo must have, Nestle must have done some level of data gathering, and there was some analysis, and they be like, oh, I think people will prefer it when we have a drink, maybe a modification to our products, where we can have both Milo and milk, tea and milk together. And they came up with it. And now there's a market for it. It's because they understand the peculiarities of their customer. So it's important for you to understand the peculiarity of the customer if you must stay afloat. The next one is you have to separate business resources from personal resources. I have said this over and over again while delivering this presentation. Separate business resources from personal resources. If not, the business will fail. I have told you, when money goes out of the business, it's either you treat it as a drawing or you return the cash. So you treat your business as separate from yourself, even though you are the owner of the money or you are the owner of the business. So it's important. The next thing is somebody is muted again. Attendance link, please. I have no idea about that. I don't know if any of the management personnel is on the call. Maybe they can do that. I have no idea about the attendance. So the next is, ensure all funds are accounted for, particularly cash. We can easily do. I said it. How it is needed to secure grants. Yes. Ensure all your funds are accounted for. It's just an extension of number 2. All your funds, every penny. Don't say something is 50,500. I still record it as 50,000. It's still the same thing. What is 500 naira? 500 naira may be material. But at the end of the day, when you have this amount of money accumulating, it can distort the look of your financial statement. So it's important to ensure that all cash are accounted for. Next, make provision for tax and put the deadline in mind. For companies, tax are usually paid within 6 months. Yes, that's why for companies, we say that they are usually assessed to tax on preceding year basis, PYB. Why for paying that personal income tax is based on actual year basis. That's why you see that for somebody who is paying some of our staff, that's why you see that when you pay your staff, you have to account for the payment to the relevant tax authority at most, maybe 10 days into the next month. You have to come up with the details and everything. So paying usually based on actual year basis. You will be paying the tax for the year your income has been subjected to tax. But for companies' income of 2022 will be subjected to tax in 2023 and paid in 2023. So it's 6 months. And tax can be paid online. I said it earlier on that when we had Mohamed Nami, before the recent FRS boss that Tinubu appointed, which is Zacchaeus, Nami was the one who brought digitalization to our tax administration in Nigeria when it comes to FRS. He introduced what we call tax pro-max, where you can just include everything about your business. That software will automatically calculate your tax liability for you. And it also give you the modalities as to how you pay. So everything now can now be done online, even filing too. Done online. So another thing you need to do is to keep track of your expenses. Yes, if your business must grow, must transcend from just a normal business to an extraordinary business, then you must what? Keep track of all your expenses. All your expenses must be accounted for. There must be a source document. I remember when I was also in training, while in undergraduate days in the Institute of Chartered Accountants of Nigeria, The division I was working, even then, when we buy Seaway dispenser water, you know that water now, that bottle. Then how much did they sell it? I'm talking about the time I was intending was 2015. Talking about 2015 year about. The amount there for that bottle was maybe 1,005. We must get a receipt for all transactions. Even when you go to the market to buy a pack of pen, you take a receipt. Why? Because we are trying to make sure that all monies are accounted for by showing evidence that those money has been what? Has been spent. So for the person who asked me the question, all your expenses were recorded. You must not feel like some expenses you don't need to record them because it has to do with you. No, you can record. And you must maintain daily records, like your sales book is important. Every day. Now there is Microsoft Excel. I mean, I don't think we have that time to dive into that. But there's Microsoft Excel. I can just show you maybe a replica of one or two things that you can begin to record or text whatever sales from your Microsoft Excel. I mean, it's a powerful tool. Even though now we have some online tools and all, it's a powerful tool. Even for some startups that have worked with most of their account, Microsoft Excel, we have them general ledger, expenses, and likes. And you can make sure, in fact, there is mobile version now, I think. So you can begin to keep track of the expenses. How do we record cash payment without evidence? Don't mind me, you explain later. If you record cash transaction without evidence, you explain later. So what I'm saying is, the best thing to do, the best accounting practice, don't mind me, is that when you record your transaction, there must be a source document. I explained earlier on. You cannot pay money to someone if it's through a bank transfer. Your bank statement will show that now. It's part of the source document. If there is, what is the word? If there is if the transfer was, if the payment was cash, you tell the person to write you a receipt. That should be the evidence. So you should not take on any expenses without evidence. It's important. It shows that you are trying to be meticulous about what you are doing, right? This one of you are asking for templates. I don't know what you are talking about. Now, the next one is maintain daily record like sales table. Next slide. So, have an easy payment method. Yes, as a business, if you are into any business, have an easy payment method. Don't have a too difficult. If you see that most of your customers are probably using a particular account number, I mean bank, since you are a, what do I call it now? Since you are still a small business, you can find a way to make sure you cover their interest. Make sure their payment is seamless. It should not be such that they will always be back and forth to pay, because customers are usually turned up. I'm buying something from you now to pay is becoming a problem. Next time I might not just come to you because you are not the only one. You know, in that line of business, there are millions of other people who do that, and that's part of what we're making with you. The next one is to prioritize an audit trail. I've said that. If you understand what audit trail is, I think the audit trail is a term in audit where we trace the transaction from inception to completion, right? And to do that, we have to make sure that all the documents that evidence a transaction are present. Because if I want to know whether a transaction has occurred, what I will ask you, for example, if you make a payment, I will ask you, can you show me an evidence of that payment? If you are telling me you cannot find it, I already know that there's a problem. Or you don't know where it is, I already know there's a problem. Is either actually you make that payment, there's something you don't want to disclose to me, or it shows that your business does not have a proper, record keeping habits, right? The next is to keep track of your account receivable. Account receivable are those that are owing you. Keep track of those that are owing you, and have a control measure in place. The control measure can be that you can stick it on your invoice for every customer. Every customer who cannot pay 100%, okay, we allow them to pay at T+1. T+1 means that when they bought the transaction, they still have 1 month to pay the balance. That means if I buy something from you in September, you are giving me the window that at least I pay 50% now. Then +1 means I have the whole of October to pay the window. Well, it depends on your control measures. If you see that you have not grown to that point, you will not do it. And if you see that you have grown to that point, you can do it. So that somebody will not say, when I went to go and meet, I just realized that when all of them get the goods, my customer, they will not pay the 50%. They just tell me I'm sick. Or my cousin in the hospital. So because of that, I'm not able to pay, and the debt goes back. Those kind of things. So it depends on your analysis of your business, just to make sure that you have this all inclusion. I mean, you have this inclusion, particularly when it comes to the range or the income level of your customer, to make sure that all of them are well represented. So, what other thing do I need to talk about? Yes, I think the next thing is certain grants that you can begin to do, you can begin to hire as a small business. You can just write them somewhere or screenshot this page. Just begin to hire it. Bank of Industry, they usually have a grant for small businesses. Tony Elumelu Foundation usually have a grant. You want to be interested in all this. So just write them somewhere so that you begin to hide them, even as a small business. There's nothing as good as when you have a grant, though. Even when I was in Unilag, for example, because I graduated from Unilag. I mean, of course, it's not like I was running the business, but it was like I was on scholarships, for example. And I mean, those scholarships, there's an amount of money they pay me every year. You know how grant feels like. When you finish all the process and you get grant, it looks like a money you don't like. It's not like you really work for it, but in a way, it's also helping you. I remember those times, just collect scholarship money, just wake up one day and just see a lot from NNPC or from Seplat. You understand? You understand? So it looks like, oh, I mean, to help you, to make sure you understand. I don't want to dive into that, but I know I've even said you understand so many times. Don't mind me. I'm used to that. So, Tolu Elumelu Foundation, watch out for that. It's an entrepreneurship grant. Lagos State Entrepreneurs Trust Fund. This is an entrepreneurship grant. Now, you can also be eyeing it and make research about it. Growth Fee Fund. I think these are more for fintechs, businesses that just started. Another one is Africa's Young Entrepreneur Empowerment Nigeria. I can begin to also look into that, so that when you get those funds, you can also help your business. So the last thing I want to talk about is, okay, software you can explore to record your transactions. You have Microsoft Excel, you have QuickBooks, you have Sage, you have Expensify, etc. Most of this one is a paid one. Like QuickBooks is paid and is cloud-based, that is online. Sage, same thing, Expensify, but the one that you can still get is Microsoft Excel, right? So this is what I'll just do now is that let me see if I can share. I don't have, like the template you're asking, I don't have that one on this particular laptop. Yes, this is my own personal laptop, right? I don't have it on this particular laptop. So what I will do now is that let me see if I can quickly do something. Can you see my Excel screen, or you are still seeing the presentation?
The presentation.
You see what you guys can see, right?
Yes.
So these are the software you can use. So let me just show something on Excel. So I think that's the end of the session, but let me show something on Excel. Then before I even end the session, I'm going to send the link. Now you can check me up on LinkedIn. I am Elijah Folabi on LinkedIn. You can check me up on LinkedIn, and I'm going to send a link on this chat box. On that link, you can write a recommendation for me. Recommendation in the sense that, let me see if I can have access to it. Recommendation in the sense that you can just write your perspective about the class, what you have learned. I mean, in a way, I've taught you, I facilitated a session where you were there. So your experience, just share your experience, right? So let me drop that link before I show you what I want to show you on Excel. Then we'll call it a day. Welcome, I'm looking for the chat box. Okay. So if you're on LinkedIn, you can consider this link I'm sharing. You can just write a recommendation for me from your, how the session has been, what you have learned, or your perspective generally about my way of facilitation. So I've dropped, please confirm you can see that link, everybody.
Hello, sir.
Please, I
Yes,
wanted
can
to
you
ask
see
a question.
can you see the link I shared?
I've seen the
Yes,
link.
Okay, please ensure you click that link and just write the recommendation. Anyway,
I wanted
who
to
is
ask a
writing
question,
on
sir.
my screen? Okay, please go ahead.
All right, with due
Who is
respect,
writing on my screen?
I wanted to ask a question because of a tax paying.
Okay.
Subsequently, I've been paying tax with the Lagos State government before I was able to get through with my business process on which I started paying tax. But what I wanted to ask now, I mean, paying tax as a personal, individually with the Lagos State and also paid for business. Is it not that overwhelming on the other side, or is that right?
Please take that question again. This last sentence. Just take it again. Last
Yes,
sentence.
I said I started paying tax with Lagos State government as individually, as a person, Lagos
Yes,
residential. So
LIRS, yes.
yes, I've been paying that for a while before I get through with the FIR, FIRS, for the business tax process. So now I'm paying with the business, um, you know, paying for the business and also me. Or is it right that I should be paying that way?
Is it right that you should be paying? That's for the person who requested for that slide. It's up
No,
now.
I paid for federal in the inland revenue. I also paid
That's for
for
your,
Lagos State.
yes, I
Is it
understand your
right?
question.
Yeah.
It's right. But let me
Is
let
this
me say
for,
this.
I felt
Let
it's
me say it this way.
ridiculous.
No, let me just say it this way. The one you are paying to FIS is not as an individual. You are
Yes,
paying
not for
tax
business.
on the profit for your business. The profit for your business is different from the fact that maybe you are in paid employment and you have a salary, you are earning. Do you understand what I'm saying?
I
So
do,
the one you
sir.
are paying to FRS is as a company. The one you are paying to LRS is as an individual from your income. So the profit from your business is all the profit from your business is what you declare to yourself as income every year. That is where it will be subjected to tax for personal income tax. You understand? But
Yes, sir.
if you make the profit of say 2 million from your business, and from that 2 million, you are only paying yourself as maybe say 200K. So 200K is like your own. So that 200K forms income from other trades that you are engaged into apart from the company you are working at where you are earning salary. Do you understand? Do you get it?
I do, sir. But to me, I was like, it's somehow ridiculous, paying to tax
No, it's
to
not a, it
different
depends
tax
on
and I mean,
it
so I
depends
just
on
felt.
who. Okay, sorry for cutting short. I don't want to lose my thought process. It depends on
Okay.
who, it depends on how you are preparing this thing. It's not a double taxation. It now depends on how you are declaring whatever your income is. This is not double taxation. If I have, if I declare 200 naira, 200K as part of the money I'm paying myself from my business. Let me ask you, are you still working in another, do you still work in another like a company that you earn salary?
No, that's for my business. That's what I have to. That's from my business now.
Then
I paid
exactly.
for.
Then
I also paid the one that I earned. I also paid for Lagos State. The
okay,
same
this is
money I earned from the business, I also paid for Lagos State and I also paid for business. So I felt it's like double taxation at my own side. I don't know. I
okay.
needed to draw this to their attentions and see what they can do about that. But I'm just trying to throw it to see if I can, be
Okay,
guided on this.
okay, that's right. But before I go ahead, who is writing on this screen? Please stop this. What is all this? Now, to answer your question, right? Because I'm trying to um, I'm trying to see to what you are saying, right? Because the truth is, if you have a profit from your business and you are paying, let me ask you, does your business still fall within the small business range? I mean, in terms of turnover.
Yes, sir. It's still a medium, small mediums enterprise. Okay.
And your turnover is not 25 million. So there's no point paying company income tax and tertiary education tax. I'm not talking about other tax that you are eligible to by virtue of maybe making transfer or by virtue of receiving certain money or by virtue of rendering services. Because if you render
Okay.
service that is bankable, you pay 7.5%. When we are
Okay.
talking about not paying tax for 25 million, I've explained this earlier on. We are talking about company income tax, and company income tax is charged on the profits that you have made in that business, provided your turnover is not up, is not more than 25 million. So in this case now, I'm guessing your turnover is not even up to 25 million, right?
Yes, sir.
So maybe what you are paying to FRS as it were is not a company income tax or tertiary education tax. Maybe what you are paying is like VAT, maybe value added tax and the likes. Because it's not possible for you to be tied to tax, like company income tax, when your turnover is not 25 million by your filing. It's not possible. But it's possible to be charged with tax under LRS because you are an individual who is in a because personal income tax says either you are in a self-employment, I mean, either you are self-employed, like you have a business, income from it, or you are in an active employment. Do you understand?
I do, sir. For more clarity.
So I think yes, I think there is just a lag somewhere.
Okay, sir.
The person writing on my all right, no problem. Thank you very much. I'm glad that helps. The person writing on this screen, well done, more this to your level. Attendance link not loading. Okay. All right, quickly, let me just see if I can. I don't have that thing you guys are requesting for on this sheet, but let me see if I can just show you. I'm coming. Please stay on the line, guys. Where is this way? This way.
So much.
Okay, let me see if I can first share this. Then I'll just show you how to record. Then, if I get the templates, I'll find a way to share to your facilitator and they will share with you. Is that okay, guys? Are we good? Can somebody hear me? Okay, let me just show you one of the what a ledger looks like. Can you see my screen now?
Yes.
Now, look at it. This was a work I did for a particular company, right? What I was trying to help them do was to reconcile their bank statements, right? This is a microfinance bank, actually. We're trying to reconcile their bank statement with, are you with me? With their ledger. Now, this is their ledger here. Because it's like a bank, so one of the things they do is that they give POS to people. Are you with me? They give POS to people to use, and in a way they can track it. They can track what expenses, whatever payment is going out, whatever payment is coming in. So look at what happened now. At this particular date now, there is don't let me even use this universal, let me use other entry. There's a transfer from Stanbic to First Bank, 5 million, have it? When that transfer is being made, in your own ledger, documentary principle says that you credit the giver, you debit the receiver, in a layman's term, right? So you credit this 5 million naira because money is going out. Abi, you are parting with money. But as you are crediting this, what do you think the bank will do? The bank will debit you. Can you see debit here?
Yes.
Hello. The bank will debit you.
Yes, we can.
You can, right? The bank will debit you. That's why you get a debit alert in the bank, right? Because to the bank, every of your money is like a liability. So when money is going out, they will debit you, right? So this is like generally what you have from a ledger, but because this one has to do with the financial institution, you have the date of the transaction, you have the narration, you have what? The debit, and you have the what? The
credit.
Yes, this is what a journal or a ledger looks like. So do you understand what I'm saying? So at the end, what I was even trying to do here for these guys was to help them reconcile and see some amounts of money that were paid for or were received at the bank end, but that was not reflected in the company's book. Right? So having an Excel sheet, even whether I'm sending a draft or not, is what you can get online, I guess. So if I want to begin to recognize transaction now, I can come and say, what is the date of the transaction? Can you see my new screen? Can you see
Yes,
the
I
new
can.
sheet?
Yes, sir.
Okay.
Yes.
And you have the details. Yes, always respond. So I'll say, I'll know you are with me. You can have the details. In fact, if it is a book you are keeping first, you can have an amount, maybe daily sales, before you now prepare a financial statement, right? You can have an amount. At least for now, you should be able to keep track of whatever thing you are doing, right? And if no, before even amount, I can put there if there is a discount. Abi, are you with me? Let me add one more column. Discount,
Yes, sir.
right? There's a discount. I don't need that. Let me just come here. I can come here and just say amount.
Wow.
Let me assume that on these dates, this is like maybe your sales summary now every day. Let me assume on this, because before you can prepare financial, at first you must be able to even keep record. This particular sheet can be your sales sheet. Are you with me?
Yes,
It can
sir.
be your daily, it can be your daily sales, right? Or I can say sales for the month of September. Right? So when I come here, what's the date? Let's say today's date, or a date 20th of September 2022. What is the details? Maybe you sold, what is somebody selling here now? Maybe you sold data, MTN, 5 gig. How much is it? Maybe the normal amount is 3,000, but you gave a discount of 5%. Abi? You gave a discount of 5%. A discount of 5%. So I don't even need to, I can just do this. Okay, let me not do that. A discount of, say, let me just make it 5, ordinarily 5. A discount of, say, 5%, right? And the amount normally is supposed to be MTN data 5, maybe 5,000. This is just like a rudimentary something. So at your leisure, you can take your time. I also try to send the templates, but you can take your time to now see how you can begin to use Excel. Excel is what you have access to. And what I'm doing is just rudimentary. I'm not doing anything serious here, right? This can be the total. Let me use that amount. Total amount. And this can be the words. This can be the net. Let's just say net. Or let me say net amount then, so that you understand what I'm saying. So at the end of the day, there's a discount of 5%. How much will the person get? Then you can apply formula that will be equals to this total amount is supposed to pay, times, right? Times what? How many percent? If the discount is 5%, how many percent is left for the customer to pay? 95%, Abi?
Yes.
That will be 0.95, 0.95. So that means the customer will pay how much?
4,750.
4,750. So you can use this one to track your daily sales. And when you now begin to receive money as well, you can also have another sheet where what you can call your what? Your cash, or what? Bank what? Summary. Abi? where you can now have this copy, right? And you have it here, right? So for your cash and bank summary, maybe this day, this same person paid. I mean, you can come here, you made a payment for this, right? In fact, if there is, sometimes we usually put notes. If there is an evidence like the, what do you call it now? Every invoice or receipt has a number. So, but in case, you not just need to stress yourself about that because it's still a small business. You can have this here. Then you don't need all these discounts, whatever. All you just need to do, I'm sorry. All you just need to know here is whether your account is what is being debited or is being what?
Right.
Why is this mouse now moving now? Okay. Or is being credited, right? So I don't need this net amount. What I need here is the amount, actual money I received though. I will not come in and record 5,000. Was it 5,000 I received? No. Your cash summary, we always talk about the actual amount of money you receive. So let me assume on that day I receive money. I will debit this place, right? Okay, let me paste as value. I will what? Debit this what? Place, isn't it? So when I debit this place, are you with me? When I debit it means that the cash I have with me should increase because I have received money. Are you with me, guys?
Yes, sir.
I hope I'm not teaching myself. I'm not hearing you. Are you with me?
We're here, sir.
It's true. I'm teaching myself.
Come again. We are with you. We are with
I
you,
might not
sir.
just stress myself with this because I've taught you everything you need to know. So it's not even necessary I show you because I just want you to see how you can improve what you are doing moving on. Right? So this is the amount you receive. I know you are with me now. Thank you. So this is the amount we receive now, right? So this amount we receive. But you know, in your bank statement, this amount will be credited to your bank statement if the person made payment through transfer. Do you know? Right? So at the end of the day, let me assume at the end of the month, the total you will have here, let me assume the total we have here, let me use this. I don't want to use, let me use AutoSum. The total you will have here, right? This laptop, I'm not using my normal laptop. That means if I had every other thing here, you had it. So let me assume the total you have here is what? 4,007. At the end of the day, in your bank statement, on the credit side, because credit entry in the bank means that you are receiving money, Abby, you should also have what? 4,750. If you don't have 4,750, just like the job I said I did for these people, then that means that, and normally what you have in your credit in your bank is what you have in your credit, your debit in your cash account that is with you, that you have been operating within your organization, right? If you don't have the same thing, then it shows that there is a problem. Then perhaps that means that perhaps there's some money that has entered your account. If the money in your bank account is small, that means there's some money that has entered your bank account that probably you did not get notified of for you to come here and put it here. Because your cash and bank summary that you are holding should be a mirror to what you have in your bank statement at the end of the day. That's what I was now trying to help these people do. We call it bank reconciliation in accounting, reconciliation of bank statements with what we are, the accounts you have been holding within the company. Do you understand what I'm saying? So that's how you now know. But in most cases, you not always have the same thing because there are some expenses, there are some bank charges that your bank would have debited, you say 20 naira for the whole of the month. Let me assume this is the bank charges. If you get a notification for it, then you can easily come here. Where will you put this 20 naira here? It will be on your credit inside your, the one you are keeping within the company. Abby? Abby, guys. Hey,
Yes.
Abby? So yes, you have put it here. But let me assume that you did not, you were not notified. So at the end of the day, what you have here might be lower than what you have here. So you now come back to now include this. You understand? So you can read more about this, online, and all of that. So you can start to use Excel to track your sales, particularly your sales and the money coming in for you. And also you can also have a sheet for your what? Expenses tracker. Your what? So that even when I come as a person, I just come and meet you. I say, Gloria, can you tell me how much expenses have we made for this year? You should be able to tell me, oh, sorry, for this month, you tell me that in the month of September, the total expenses we have incurred is 20,000 naira. You should not be able to say, expenses, you now say that, hey, I paid, no. You should have a sheet where you upload, you update it daily. And you can do that. Excel is something anybody can have access to. You understand? So, guys, this is where I will draw the curtain. Somebody sends Zoho. Yes, you can use Zoho books as well. Yes, I'm aware of Zoho. Yes, guys. So I'm drawing the curtain here. Is there? If you have questions, please ask me quickly before we end the session. Any question? If I don't get a response, I will know that you don't have any question. Any question? Okay. In the absence of no other question, I hope you have been able to learn one or two things from this session, right? And it's my pleasure to have been here to facilitate this session with you. My name remains Elijah Falabi, so thank you for your time. Don't forget to write the
Sorry, sir, before you go, please. The second to the last slide you showed now.
This one?
The grant slide.
I have shown this thing severally now.
I was trying to write it, but you removed it before I could even finish.
Just take a screenshot. Take a screenshot. Even though it's my intellectual property, but take a screenshot. Don't worry, you are covered.
Hello, sir.
Sir, please, the software slide. The software slide.
All right. Are we good now?
Sir.
Have you seen the software slide? I can't hear you. That place is noisy. I can't hear you. Have you seen it?
Yes, I can see.
All right, guys. So please, you can drop a recommendation, like I said, for me on LinkedIn. It's not mandatory. It's not compulsory. If you wish, I mean, if you think you can, just go ahead. So thank you very much for the class. Please have a nice day. Bye.
Thank you, sir. Thank you.
Thank you.
Thank you,
Bye.
sir.
Thank you, sir.
Bye.
Okay. 50. Is it 50 or 50? Zero. 5 0.
This one. Is 102.
That's 103 now. 1.3.
1.3. That's 100,000.
This one is 1.2.
1.2.
150,000 per 1,050,000. 1.2. Barely 100,000. That's 1.3.
So when the Jabos oil, labor. See Jabos module.
Jabos module.
Jabos module.
How can the module be more? So we have Jabos. Can the module? It's a color. Come on, see color. Can you know? I don't know. Yeah, please, has anyone registered the link, the attendance link?
Good afternoon. Which network? Ability, come. Number 090 40 433. 65 64. How much?
Like
100.